be fine as long as Sam doesn't ask any questions. Okay, we are going to get started now. Should I play the song again? Just kidding. Anyway, oh, it's really going to mess up my recording on the other computer. It's been running for 50 minutes, just nothing. Okay, anyway, I asked the question earlier about GS, and the answer was it's a red day, or it's a down day, but it's a green day. It's a green day because today's closed above today's open. It's a down day because it closed below yesterday's close. So that was that little question we asked. Let's move on to what we're actually going to talk about tonight. We are going to talk about using the 50-50 system for swing trading. So real quick, for people that might be new here or didn't listen the last time I did the 50-50 webinar, the 50-50 trading system, when you see an alert that says 50-50, when it says like this, the first thing you got to understand is you're not going to see a sell alert. The reason you're not going to see a sell alert is the trading system, you set the sells up as soon as you make the buy. Okay? So what I mean by that is, let's say I buy something at $1. Let's say I was buying Apple, whatever strike calls, at 1.00. I would take half of my position and I would set a limit sell that is good till canceled. And that limit sell would be for $1.50, a 50% gain from where I bought it from. The other half of my position, I would set a good till canceled trailing stop, and I would set that for 50% of what I paid. So it'd be a trailing stop of 50 cents. That's the basic of the system. That's just the basic of it to help you understand that, you know, as soon as I buy it, I'm setting the sell orders and I don't look at it again. Now, there's a couple important things to understand about the 50-50 trading system. What type of trade system is it? What trading system do we use for the 50-50 trades? Swing points. It's a swing point trading system. Now, swing points are the easiest thing to see on a chart. All it is the high and low close points of visible moves. That's it. High and low close points. So you put a horizontal line. Like if I looked here, I'd say, you know what? That is the lowest close. And then it came up and it gave me a swing high. And then it came down. It gave me a new low point. And then through all of this, I'd basically be sitting with swing points looking like this. Now, options in general, options just in general, it's a game of $1 moves. That's what it really is. The reason I say that is because the Greek levels, the delta, the gamma, they're based on a $1 move for the stock. Really, really simple. Really, really simple. Well, even though the 50-50 trading system, I shared it a few weeks ago with people for day trading, yeah, that was primarily just to give a day trading system that prevented you from hurting yourself. Because let's face it, it's easy to buy, it's hard to sell. That's really what it boils down to. But also with swing trading, there's more potential to make more money than in day trading. That's just a fact. And to use that 50-50 trading system for your swing trades is really no different than if you're using it for day trades on a 15-minute chart. It's simply establishing what you have to wait for and setting up your order. Now, is there a trade system out there that guarantees you'll never have a losing trade? No. If there was, we wouldn't talk about so many of them, right? We wouldn't talk about so many different ways to trade if there was one that guaranteed that you'd never have a losing trade. Because I don't care if it only returned 1% a day. If it was guaranteed to never lose, that's how I would trade. It's real simple. Now, a big thing to understand with swing point trading is really what you're doing when you trade swing points. You're either trading a retest of a prior point or a breakout. That's really what you're doing. And just like you learned how to color in kindergarten and they told you to stay between the lines, when you're swing point trading, you're trading between the lines. It really is that simple. I'm saying it very simply because it is a very simple thing. Now, knowing that swing point trading is a game of $1 moves, we are going to use as a general rule for the swing trades that we want to trade the next available monthly and the first out of the money strike. First out of the money strike. So let's say we have this chart set up and these swing points set up on the chart, and this happens. One thing you'll find with a chart like Apple is that taking that next available monthly and just one strike out of the money, you're going to find for every dollar it moves, your swing trade's going to move about 20%. Amy, when the monthly expiration's the current week. So like right now, if I was using this, I'd still be buying January 17th. Next week, I'd still buy January 17th. This isn't like other trading systems where we're trading really far out of the money and we need that time to protect us. Quite literally, any chart that you would use this on, you would need less than $1 move. You would literally need less than $1 move. Which truly can happen in a day on something like Apple, can it? So we're going to walk through the chart and look at some different instances and keep things real simple. You know, if you were looking at the chart at this time and you had this big gap up like this, like literally $6, are you buying anything on this day? Absolutely not. But do you want to sit and just convince yourself that you can't touch it until it fills the gap? I mean, that's kind of stupid, to be quite honest with you. It is pretty just stupid to say, well, unless it fills that gap, I can't touch it. So we don't want to buy it on that first day. But what would give us the criteria to allow us to buy it that next day? Anybody? Well, you see that next day when it happens, It'd still be something where I'd wait to the close, but you see, I would take the close of that gap up day. And I'd say, you know what, if it closes back below that, I'm going to stop out of it. Now, as things progress, you got to understand, okay, did it get a dollar move? You'd have been buying this at the price 81.71. At 81.71, what strike call would you be buying? The 82. So you go and you get the 82 call. If we just go to this day, what's your 82 call looking like right now? Is it in the money or out of the money? It's in the money because the share price would be above the strike price for the call. Now, just knowing that, like I shared with you earlier, on that next available monthly, every dollar move, you're going to see about 20% on that monthly. So if it moved $3, what percentage are you going to see? Okay. So let's just assume that we bought an $82 call and we spent $1 on it. What 2 sell orders would we set up with the 50-50 trading system? They'd be good till canceled sell orders. No, Richard, I only shared it for day trading for people to protect themselves. I have zero intention of actually continuing to use it for day trading. I hate day trading. I despise it. Day trading is not a way to consistently make money. There we go. We'd have a limit sell for $1.50. We'd have a trail stop for 50 cents. So if it went up 60%, let's say we bought 10 contracts and we get that $3 move, assuming that you get 20% per dollar move. How many contracts do we have left? 5. Why would we only have 5 contracts left? Yeah, that limit sell is going to hit because we would have at least gone to about $1.60 and we had to sell at $1.50. So it's not about trying to guess a top or anything like that. It's about just consistency. For one, this trading system is just about consistency, and it's about just kind of setting it and forget it. Now, once your limit order sells for half of your contracts at a 50% gain, what's the worst this position could do for you as far as profit goes or loss? A 25% gain, because your other half, if you went up at least 50%, that trailing stop would catch your other half right at what you paid for it. The whole point of that trailing stop is, in options, it's very common to see stuff run several 100%. So we put the trailing stop, so hey, let it run. And then we use that limit sell to guarantee profit. Because once that limit sell hits, you can't lose any money. Unless you had just some super huge, ridiculous gap down the next day, and that's going to be so few and far between that it's not worth talking about. But it makes it really, really simple. Now, that's when people will right away go, shoot, I sold half, it's still going up, what do I do? The week that the monthly expires, so like not next week, but the week after, Amy, we won't be looking at January 17th because it'll be in the expiration week. We'll look at February 20th. Well, we don't just buy more calls at any random time. It would have to do what for us to buy more calls? It's going to have to, establish a swing point. Oops. Just realized something on my settings here. Anyway, it's going to have to establish a swing point and then break it. What are we going to do on this day? Your closing price, 85.85. What strike? 86 calls. There we go. And let's just assume we're buying those for $1. What do we do the second we make the buy? Yep, $1.50 limit sell, good till canceled, 50-cent trailing stop. And the reason we're using that dollar buy as the example is it's easy to say half of $1 is 50 cents. So we set a $1.50 limit sell and a 50-cent trailing stop. If you bought it for 60 cents, it would be a 30-cent trailing stop and a 90-cent limit sell. So as things continue, ironically, you would actually still be in your half a position that has the trailing stop on it. Let it keep going. Let it keep going. Now, when something like this happens, believe it or not, you're not necessarily going to be stopped out. You'll be down about 40%. At least close to the end of the day, yeah. But did you notice what happened on this day? We had a swing low point right here. So what would we want to do when it breaks below a swing low point? There we go. And it closed that day at 84 even. So the first out of the money strike would be an 83. Now, ironically, it just moved $1 here, which would put you up about 20%. And that's a good time to stop and talk about that trailing stop. Remember, if we're up 20%, that trailing stop is no longer going to be at 50 cents, right? It would be at 60 cents, wouldn't it? Actually, it'd be at 70 cents, sorry. Because if we went up to $1.20, my trailing stop moved that same 20 cents up. So if it did come to the point where I stopped out, it would be something that I'd be okay with at that point because, hey, I will have made money or not lost as much type of thing. Now, one thing to understand is if your trailing stop hits first, let's say your trailing stop hits and your limit sell never hit, which basically means you picked the wrong direction, right? If your trailing stop hits and your limit sell never hit, you picked the wrong direction. Would you agree with that? That other half of contracts that all they have is a good till canceled sell for a 50% gain, what are we going to do with those? Yep, we're just going to leave them. And that's a hard thing for people to understand and cope with because let's face it, that means quite literally they could be a 100% loss, right? Which would be a 75% loss on the total trade because you will have stopped out at half of 50%, the other half at 100%, that's 75% loss. But you see, when options regularly give 100% moves, it's not that big of a deal. And Amy, you've seen them come back, haven't you? Because the reality is if they do come back, your limit sell is at least going to break you even on your trade. So when something like this happens and it gives us a new low point, and we're looking at this, and I can tell you, we wouldn't have stopped out of our calls. Our stop would not have hit. Uh, 2 weeks in a row, Aaron, we had 1 week our puts came back, 1 week our calls came back. But anyway, here with Apple, when it breaks back, even though we had a swing low point here, remember I just had a line there that I deleted. Are we going to do anything on this candle? Nope. It's got to break a high point, right? So what are we going to do here? Now this is where the way I swing traded this system is going to vary from what I talked about with using it for day trading. With day trading, I said you always wanted to wait until half sold before buying more, right? Yeah, well, see, with the swing trading, I always buy more on a swing point break, whether something's sold or not. And I now have over 1,000 completed trades using this system for swing trading, and I love the results. Yep, they stack the trades, Moss. Him and Mr. COP, they're stacking their trades. That's what they do. I've won about just shy of 88% of the trade entries, John. That's why I'm even talking about the system. So anyway, right here, I had about 87 calls, set up my 50-50. And by the way, right here, you would have had your 50% limit sell, or your trailing stop, I mean, hit on your puts. Right here. So now you just have half of that puts position. And you know what? It could be a loser, but if it is, that means 2 calls positions are doing good now. And as time goes on, you're going to start to see we would have established another swing point here. By the way, you would have already sold another half of the calls. So both your calls positions, actually, sorry, all 3 of your calls positions, because remember back here, you got one. And actually right here, no, you would have already sold one of them because of expiration. But right here, as many as you want, Sam. Right here, what would we be looking at doing again? Closed at 91.08. There we go. We would take 92 calls. We'd mark a swing point on a break here. By the way, right on this candle, your 50% trailing stop would have hit, not on these ones, but on the ones you bought here and the ones you bought here. Trail stop would have hit. Now, are we buying puts just because it went down? No. Moss, that's a great question, and actually my answer is yes. That's what I was just going to get to right here. But there's a big difference in how I do it than how you might think to do it. You see, when it bounces off a prior swing high, not a swing low. You see here, this was a high point that pulled back, came up, boom, makes a positive move. I do buy calls when it bounces off of a swing high. If it would have come and bounced off of this swing low here at 89.81, I wouldn't buy calls. You see, we see things all the time that in down moves, even during like intraday sessions, you'll hear me talk about it in the chat room, where it drops and it's like, okay, it's going to come back up to this price. And then Juan goes, oh my gosh, you called it to the penny. And it's because it was just the last swing low, and it can go up to that and still be bearish. Same applies with these charts. If it's a bullish move and it bounces off a swing high, that's cool. If it bounces off a swing low, I'm not going to touch it then. But as we go on, sometimes it'll bite you. But ironically, even though I would have bought here, I would not be buying here. And I wouldn't have taken puts unless I broke below there. And what do I do here? More calls. And it would have been $97 call, or 96s, even though it was just 3 pennies out of the money. Closed at 95.97 at about 96 calls. Now, as time progresses, you're like, well, son of a gun, as soon as I bottom, now it comes down. Luckily, it didn't come down yet enough to stop you out. And what could we have done right here? That could be another calls buy. And then it turns around and makes you wish you wouldn't have bought calls because it would have actually triggered a trail stop here. Now, let me explain something to you about the beauty of stacking the trades like we talked about. What it allows you to do is you got to think of the average trader. The average trader, they make a trade, they lose. They make a trade, they win. And really, they just find themselves struggling to break even. You ever been in that position before? You ever been in the position where it's like, wow, I'm just struggling to break even. Every time I do good, something takes it away. Okay. Well, if you stack your trades, rather than going, oh, yay, I bought calls way back here and it just keeps going up. Rather than doing that, you see, eventually there will come a time where it stops going up. But if you make every one of the breaks a buy, you'll have so many that have done well that you won't care about the last one that finally bites you in the butt. And then when you're right, you can be right 5, 6, 7 times as opposed to just once. That's why Mr. Twitter and Mr. COP stack those trades. Because when they're wrong, you'll see that, oh man, they just made one buy. When they're right, it's like, holy cow, they were buying crap all day long. Every time it broke a swing point, they make another buy. But eventually the time comes where you will be wrong. And right over here, your last, actually you would have hit trailing stops on all of them, but most of them, all except for that last one, would have already hit the limit cells. Yes, David, but that's an obsolete question because remember, this is an educational service, not an alert service. But would we be buying puts down here? On this day, this red candle? Juan, you had 3 people answer that question after you asked it. Would we be buying puts on this day? Nope, because it didn't break a swing low. We are still making higher highs, right? What are we going to do? See, we're going to mark that swing low here, and I got to take this line out right here. And even though we would have got stopped out on our trail stop for some calls, what are we going to do right here? Yeah, we're going to take some calls. $98 calls. Cool thing, guess what happened on this day right here? Remember that last buy we did right here on July 14th, and then I said it would have hit our trailing stop? The reason I know that is I was actually back then still testing this system, and it hit the trailing stop. But the cool thing is on this day, it also hit the 50% limit sell, which means that trade actually broke even. Woohoo! But over here, I already bought something else. Now, right here, we would have again had a new swing point, and then we see it falling. Guess what? It was actually on the gap up this day that your 50% limit sell hit. And yes, you would have got stopped out on your trail stop, but you'd have made 25% or so on this trade. Are you buying puts here? Nope. So you notice this system isn't about trying to call tops and bottoms. Have you guys noticed that? It's not one where we're saying, oh, let's try to take advantage of that down move, even though it might only be a couple days and still might be a higher low. We're simply trading the swing points. Now, would we be buying calls here? Absolutely not. And the reason is because at best it retested a swing low, not a swing high. If it retests a swing high, I'll buy. If it retests a swing low, I won't buy. And let me tell you why. Many times, if you get higher lows, you expect higher highs. If you get lower highs, you expect lower lows. And if you get a double bottom, you tend to expect a double top. But a lot of double bottoms actually end up and say, hey, look at this. That could be maybe come up and only make a right shoulder. I'm not going to make any money on that. And that's also something that happens a lot too. So that's why I'm not going to buy on a swing low point, because that swing low could possibly later turn into a neckline. So all through this, I basically said, man, I wish I would have bought when it retested that swing low. And you know what? Sometimes it'll have you saying that. Sometimes. Not all the time, though. What am I going to do here? $100 calls. Oh, guess what? Your 50% is going to hit. And guess what happened here? Look at this. We got a high close, a pullback. That gives us a new swing low point. What are we doing here? Buying some calls. What are we doing here? Besides going, man, that kind of sucked for them calls we bought. Well, this prior swing high would be no good anymore. But what's this right here? Swing low, sweet chariot. So even though I'm waiting until the end of the day for everything, I'd still buy puts because the trade system said, hey, buy puts. And also, if I'd have done it every time that I've kind of walked through so far with you guys, you'd be more willing to buy puts because you'd say, man, look at all this money I made. So as things keep going, and man, this was a crazy day. This was iPhone 6 release day, or the announcement day. And luckily it dropped before it went up that day and then dropped again, because what ended up happening here is you hit your 50% limit and you hit your 50% trailing stop too. No one, they're not meant to stay always. As a matter of fact, a swing high point, once you close the candle below it, it's gone. And you see, as we establish a bit of support here, are we buying calls here just because Flyer said in the chat room that he read something in the news and Sam said it's going to go to the moon? Are we going to buy calls? Not if you're using this trading system. Or wait, did something happen that you didn't pay attention to? Did Coach Mike throw a curveball? Thank you, Moss. We had a swing high we forgot to mark right there. We had a down move, we had an up move, and then it came back down, right? So we are buying calls on this day, aren't we? We'll remove that prior swing low because it closed above it. What's cool about that buy right there, 50% limit hit. And then sadly on the gap down, your trailing stop hit too. What are we doing on a day like this? I'm playing the positive move off the swing high. That's what I'm doing. And buying calls. No, it wouldn't matter because we closed below it. Swing high, if you close below it, it's gone. What would I do right here? Besides say, you know what? My limit sell hit. But what would I actually do here? Yeah, I'd buy calls because it closed above a swing high. What's the worst thing that could happen? I have a losing trade? Oh man, then it started coming down. But, oh, wait a second. What am I going to do on this day? I'm going to buy some more calls. And what am I going to do on this day? Yeah, I'm going to say, man, there was two of them losing trades. But I'm also going to buy puts here because it closed below the swing low. And then guess what? I'm really going to question my trading on Apple right here. Wouldn't you agree? That you're really going to start to question those trades in general. Well, you just stopped out of both your trailing stops on puts. You've got sell orders still higher, but you're losing on those. You bought a call or a puts play down here, and then it goes back up. And then consolidation, guess what? It's going to suck a little bit. But again, that's why you're stacking your trades on the bigger run-ups, because all through this, believe it or not, you're not doing anything except for, well, you just deleted a swing point. And what are you doing right here? Yep, you got to stick with it and take more puts. We do need to put a line right there on that higher close there. But you are going to take more puts there. Luckily, you'll actually get your 50% sell right there. Just so you know, I know that because, like I said, I've been testing it since the summertime. And The 50% sell went off. Well, no, not a swing low. A swing low, you would delete it if it closes above it. Like right here. This one would get deleted. Now, what are we going to do right here? Besides have our trailing stop get hit. What are we going to do right there? Absolutely nothing. I mean, you got to think about it. Right now, it doesn't even look like a calls buy. Well, to some people that can't think past an intraday chart, it might, but they should look at it and say, that thing just made a lower low, and that high is lower than that high. So maybe it's just going to go up and give me another puts buy. What happens here? Yeah, Juan, I could list 1,000 other trades that I actually also made on Apple based on different criteria, but they weren't based on the 50-50 trading system. So they're obsolete to talk about tonight. Ryan, I'll agree with you. You closed above this swing point, and if you sit and say, but there's another swing point right there, you're going to miss opportunities when you could just say, well, shoot, I might buy some today and some tomorrow. What are you doing here? Yeah, I'm getting more calls. What am I doing here? Now I got 3 calls. Am I glad I got 3 calls? And actually, let me rephrase this. You could have actually had 4 calls. And then here, what could you have been doing? You could overanalyze and say, oh, there's a doji candle at the top. I think that's as high as it's going to get. I said that in chat. I said, I don't think it's getting higher than this day. I think people should sell. But it should have been more calls because the 50-50 trade I made with it was more calls. Oh, we got a new swing low point right here too. Sorry about that. What am I doing here? Yeah, and that big up run, I actually ended up having 11 different calls trades when I was testing the system. I didn't take more there because I didn't feel that that actually signified a pullback. Oh, wait, I'm sorry. Let me check my notes. I did buy here. I didn't buy here. And we started to flatten out, and we actually closed below it right there. Not necessarily when it closes, but, you know, 330, 345, 350, you know, 15 to 30 minutes before the market closes, you can pretty much tell where it's going to close the day at. What am I doing on this day besides getting stopped out of every one of my trailing stops? You're correct again. Absolutely nothing. What am I doing on this day? Yeah, I actually bought more. That's another calls buy. even though we didn't really get a significant pullback there, it was a point that I had bought calls and used for it before. And because it closed above it, there's a calls. Sadly, on this one, this is one that's a funny story. It went up. This high right here was 3 cents from where my limit sell was, okay? 3 cents. Did I cancel it and sell it there? No. Why? Because, man, that run worked really good. And sorry, I've got a line right here now. See, it pulled back. This would be the swing low. Why is the top of this candle the swing low? It's the close. So what am I doing here? Yep. Setting up the puts buy. The trailing stop actually went off this day. And then on this day, I was like, man, I wish I would have sold those when they went 3 cents from where my limit was. But what am I doing on this day? I will tell you, I didn't do what I should have done, but it should have been a calls buy because it bounced off a swing high point, didn't it? And then I'm going to mark the swing low right here. And what would I do on this day? Well, Bruce, one thing about Moss is he is a master swing point trader. He's been very comfortable with swing points for a while. But what am I doing on this day? Yeah, that's going to be a puts buy because I had the low and then it closed on a high move. So by having that set, it allows me to go, dang it, I wish I wouldn't have bought calls, but at least I can buy puts. What am I doing on this day besides deleting this swing high line right here? Because what actually happened is the puts I bought here, I got my 50% limit sell. But yeah, I'm going to buy more puts because it dropped below it's a swing low, but it's really a consolidation low. But we did move up and come back, and that was my low point, so I would be buying here, puts. Now, sadly, in this case, what you got is you didn't retest this swing high. You failed it, which takes it out of the picture. You closed this day above a swing low. By the way, your 50% trailing stop on both your puts plays would have hit here, and you already made money on the one. So what am I doing here? Anything? Except for marking that as my new swing low? No, I'm not doing anything with this trading system. How about right here? No, just deleting a swing low, right? I got to delete that right there. That one shouldn't be there, but it should be right here. I went up, came down. What can I do right here? I could buy some calls there. Could actually buy them again here. Couldn't I? Anything else I'd be doing right now? This is present time. That's today. No, it didn't drop the swing low yet. Well, I can tell you just because I tallied it up already because I prepare for my lessons. Well, I don't have it broken down into calls and puts plays, but it was 29 winning trades to 5 losses. And that was actually from the trades I did while I was testing the system. 29 winners to 5 losers. About 85 to 90%, because the first sell would go off at 50%. You're right. There it goes. But it's a very, very consistent system. Now, a lot of people will say, you know, Coach Mike, if you tell me to get the next available monthly, that doesn't make sense because you've told me all along to give myself like 4 to 6 weeks. Why does it make sense to still get the next available monthly? What is different about this trading system than most of my others? There we go. It's only $1 out of the money at most, right, Ryan? That's at most. At most, it's $1 out of the money. It would never be $1.10 out of the money, would it? It'd never be $1.50 out of the money. It might be 10 cents out of the money, but it would never be $1.01 out of the money. But let's face it, if we were talking about one of the other trading systems I've taught about, like right now, we might say, oh, let's buy like 106 puts, right? That'd be common for some of the types of trades we make. Hey, let's buy 106 puts that would go in the money if it came down here, or 107s. The difference is when you're closer to the expiration, you have more what? Volatility. And that whole fear of time decay, it doesn't have much of an effect once you're in the money, does it? Once you're in the money on your option, that whole time decay thing isn't really that big a deal. The second one, from where? The top, the middle, the bottom? Well, and these are questions you can ask when I open it up for questions afterwards. That way I can stay on topic to my lesson. That's a swing high. So anyway, one thing to understand about this system is you're not really going to have those time decay effects. And quite literally, especially because you're looking at needing $2 to $2.50 to guarantee making money. What I mean by that is once your limit order sells, you're making money, even if your trailing stop hasn't yet. How many days does it take for Apple to move to? Yeah, 1. But what would the importance be to stacking the trades, to buying multiple trades during a run? Well, it's multiple winning trades, but even more important, it answers that question a lot of people have asked me about this trading system. Why do I want to sell at 50 cents or 50% if I could make 100%? Because during the same time, I tried a trading system where I set the limit sell at 100% gain. Didn't have the same results. But this allows me to be persistent and make trades quite regularly, right? So then the other question arises, how much money do I need to do this system? One thing that's really funny about this system and other systems I teach, it's very consistent across the board. You hear me say it a lot. Before you start half-assing multiple charts, learn to master one of them. Master one chart before you half-ass 2 of them. But you know, like with the focus group, we kind of divided that initial money up to make 5 trades. This is a trading system that you might not ever be in 5 different trades on, but that you want to have your money divided up to where you could. And the simple reason for that is it's had 3 different times just since July, or actually just since April, 3 different times that you could have been in multiple trades in one direction. Like I said, Juan, those are all stuff you can ask at the end when I open it up for questions. So to leave yourself the available capital to be able to trade the system, at least I'll say appropriately, but appropriately in the sense that I performed 1,000 trades on it using the exact same disciplines every single time. And nearly 88% of the trades were winners. It's actually now 87.18. It was a little higher. I had one of them be a loser today. 87.18. And that's still pretty damn good. So one thing that I see people making a real big mistake on, and I say it as nice as I can. Sometimes it doesn't sound like I'm saying it as nice as I can, but that's when I've tried to say it several nice ways and you still didn't get the point, is when people try to do too much. Now, without saying any names, we've got a couple newer people in here. A few newer people in here. A couple of them have a lot of money and a couple of them don't. Doesn't matter. But I want to remind you guys that just because you have money doesn't mean you know what to do with it. So don't be in a hurry to lose it. Learn one thing and get really good at it before you take on something else. Now, I'm going to make this easy for you. I have done trades on 35 different charts using the 50-50 trading system for swing trades. And I'm going to give you the ones that are the most consistent, the most affordable, meaning even the smallest account in this group could buy at least, we'll say, 4 contracts at a time safely for one of their trades. And that list is going to be Apple, Facebook, Twitter. Ironically, and I'm reluctant to say this next one because it's our focus group chart, Goldman Sachs, Caterpillar, CVX, COP, and First Solar, FSLR. So AAPL, Apple, FB, which is Facebook, TWTR is Twitter, GS is Goldman Sachs, CAT is Caterpillar, CVX is Chevron, COP is ConocoPhillips, FSLR is First Solar. And these I'm talking about with the swing trades. The next available monthly, the first out of the money strike. Let's go over and look at a couple of these. And without doing as much of a run through of the swing points, we're just going to mark some simple swing points, and you can see like where a starting point would have been. And it would have been right here. You would have had a calls buy. And then you would have hated yourself for buying the calls, but you would have actually still been in the trade. It would have come around giving you a second calls buy. You'd have had to move your swing low and delete this swing high. And over here, you would have established a new swing high. Right here on this one would have been where you realized you were in consolidation but bought calls. And right here would have bought puts. These would have been the 2 worst trades of the whole sequence, okay? Would have been this calls buy on March 6th and this puts buy on March 13th. This calls by would have worked pretty good. And by the way, that calls by still did work out pretty good. It broke even. It's just that it stopped you out before it hit the 50% limit. So when you got stopped out, it was basically a break-even trade. And as we go through all of this, you can just see the little swing points and all the buys you would have had, and you wouldn't have taken any puts right here because you didn't break swing lows. But we would have to get rid of that. We would have to get rid of that. We'd have to get rid of that. And then, oh, that famous W pattern that this system will actually help you trade because breaks the W, making a buy. Over here, you would have had another buy. And then we'd have to take that line out. We put one here. We put this over here. Right over here, sadly, you would have had a buy that you stopped out, but luckily you still would have broke even because of your limit sell. Now, if I go over to right here, this is when this one got really fun. There were 2 times. That downturn gave you actually, you would have had a line right here, and a line right here, and a line right here, okay? You would have made the puts buy there. At the open the next day, your 50% or your 50% limit sell hit. And remember, just on Apple, when we first were talking, we talked about that gap up and marking that first close. Same thing on a gap down. It dropped down below it and it closed below it the next day. You'd have been buying. You wouldn't have bought here because that was a prior swing high. You would have bought here because it busted below your swing lows. And actually on this time, you would have hit your 50% limit sell and had 5 more cents to go. Over through here, we're just going to delete a couple things to kind of clean it up. And during this time, you would have had a swing low right here and right here, okay? So you would have bought puts here, but you would not have gotten puts here. Sadly, it opened up and kept dropping. So you would have marked your close. Your next day, you fell below it. You could have gotten puts again. Right here, you would have had a low, and then it bounced up the next day, and the next day it broke below it. There's another puts buy. You had another puts buy right here. And then when you mark that and the next day it went up, guess what? You had another puts buy right here. And you mark that and it went up, you could have had another puts buy on this day. You failed a swing high right here, that goes bye-bye. But you see, you made another swing low, and guess what? You broke below it here, and you dropped below an old swing low right here. And the same thing as we had over here, you had an up day, but guess what? It turns right around on you, you get another buy. And right here, you drop below another swing low. You see, this was a swing low. You drop below it. So you'd have bought, and then the next day, you'd be, I hate Coach Mike's system. But then the day after that, you would have hit your 50% limit sell. And then things start turning because you'd had a swing high right here because you had a down move and up move. So on this day, you'd have bought calls. Right over here, you had an up move and a down move, and then it broke to the upside. So guess what? You'd have bought calls. Then it moves down again. You're hating life, and you're going to have to mark your little swing lows over here. And you're going to have your swing high marked right here. Then it gaps up, and you're like, oh, shoot. Well, now what do I have to do? Same thing I did before. I'd mark my close of that gap up day. And you know what? The next day it did go up. Oops, I have to mark the close, not just a random spot in the middle of it. It did go up. You'd have bought calls and then went, gosh, I bought it the wrong time. But you know what? That doesn't matter because it still would have been a winning trade. Again, you'd have come up. You'd have had a drop. But look right here. It bounced off a swing high right there. You'd have bought that day. And then the gap up. And sadly on this one, all it did for you, it didn't hit your 50% limit, but it did go up about 40%, which means when your trailing stop hit, it was only like a 10% loss on your trailing stop from where you bought. And then when it shot back up, it hit your limit, which was pretty cool. Right over here, you'd have got your butt waxed because You just, oh no, you wouldn't have. Sorry, it didn't break below the swing low point. And up here, you broke above the swing high, but on that gap, you gotta say, I gotta mark that close. And guess what? It never fell back below it. Or sorry, it never gave you a rise above the line. So now you get this fall, but you'd have bought puts this day because it fell below a swing low point. You came here, you bounced off a swing low, but you're not buying calls on a swing low bounce. And you come up and then it comes down, and guess what? It would have been this day, your swing low right there, boom. And you bought, and then here you'd have bought because you broke below all your swing lows that you had over here. And you broke below your swing high, so that goes bye-bye. Right here, you broke below a prior swing low, so you're buying. And that was a swing high, so you're not buying there. And you broke below a swing low, so you're buying. And you basically get all the way down through here, and you're like, wow, that was like 5 trades that all were big winners. Just like here was like 5 trades that all were nice winners. And right here was like 4 trades that were all big winners. And it was never about buying the lowest price or selling the highest price. But you see, the people that focus on buying the lowest price and selling the highest price are the people that are probably still going, I can't figure out why I can't make money. And yet the answer is quite simple. It's because you're focusing on the wrong things. You're focusing on things that do not work. Well, Moss, there are times that you'll take multiple buys in the same strike. But if you think about it, if the first time you're paying $1, but the second time you pay $1.20 or 80 cents, your limit sell and your trailing stop will be different, won't they? Because those stop orders, or the sell orders, the limit sell and the trailing stop, how are those set up? Just for the day, good till canceled? Yeah. So good till canceled, does that mean we keep changing it? What I love about this trading system, even though it hasn't got me, Moss, you've seen me get big wins before, 500%, 1,000%. You've seen those. I haven't seen those with this trading system. But I've also not seen 100% loss either. I've seen 75% loss, but not 100% loss. And the other thing I've also seen on it that I didn't see on those 500 or 1,000% winners that you've seen me make, see, those are just one buy. This one might not get me 1,000% winner, but it's had me 6 or 7 200% plus winners all together before. That's kind of like doing the same thing, isn't it? That's something with your broker. I would say then that you just wait to get different strike, but I've personally never heard of that. Yeah, it's an independent thing. You're not worried about what the SPY's doing or what the DIA's doing. You're not worried about those things. You're worried about what my swing points do. And the funny thing about this on Caterpillar, during that same period of time that I was testing out this system, it was something I started working on in the summer. I didn't say nothing about it back then because it was, what, a harebrained idea back then, wasn't it? It's not a harebrained idea anymore. I've performed just over 1,000 trades on it. I've got data to say, holy cow, I'm in love with this trading system now. And it's something that stays consistent with how I trade many times. And the best part about it is one of the hardest things, if not the hardest thing for people to do, is to sell. Let me tell you the simple proof on that. I send out a sell alert. And email and private messages start going crazy. Are you sure we can't get any more for it? Well, you know what? I like making money. If I thought we could get more for it, I would have waited to sell. But that doesn't mean you can't get more for it. There's a chance that I sell and it keeps going. Yep, there's that chance. But good Lord, I told you I'm selling and I'm going to sell. So I'm not going to look at it. End of day, flyer. This system is also very good for people that can't sit and look at the market all day. They can't sit and look at the trades all day. But see, the best thing about this system, it's a consistent system you can use on several time frames of charts. I don't quite have 1,000 trades using it on the weekly, buying the next available quarterly option, January, April, July, October, with the same rule, next out of the money strike. I don't have 1,000 trades yet, but I got about 450. Obviously, it takes longer to do them on the weekly chart than it did the daily chart. And that's why I was able to get 1,000 trades on the 15-minute chart in about 4 weeks. But I could actually use this system on a very, very consistent handful of charts and trade many different types of things, almost like we do the focus group. And I will be honest, I'm so impressed with this as a trading system that the next focus group chart I pick up will be a 50-50 chart. Just so you know. The next focus group chart I start trading is going to be a 50-50 chart. And yes, Juan, it's going to be Apple. But sadly, it's going to be Apple with no day trading because we don't day trade the focus group. I got 193 more trades to complete on the 60-minute chart. And I'll be happy. Happy, happy, happy. But it is very, very consistent. Heck, let's go ahead and look at some other time frames because I've also tested this even on one like Caterpillar with a 15-minute chart. And your swing points are different than on the daily because stuff closes in different places. Remember yesterday I talked about, hey, Caterpillar came up and retested a swing point I had. I talked about it. I wish I would have made that trade. I actually did not make that trade. And I even said, you watch, it's going to come down and retest this swing high point. It didn't quite come down to it, but pretty darn close. I can tell you this, a 50-50 trade you would have done very well in. Because I looked at it about 30 times saying, why didn't I make that one? But using your swing points on your 15-minute chart, it's the same type of thing. And it's not concerning yourself with the wicks or getting all crazy about it. Quite literally, something's got to close over a line or under a line. That's it. It's an over-under game and nothing in between. How does that help you when you're not trying to do something when it's in between? Well, you're not making a whole bunch of positions only to get your butt waxed on time decay for your day trades. It'll still have some losers, but you know, it's the winners on it are pretty good. And it's something you can do on Caterpillar for fairly cheap, about 70 to 80 cents per contract on a Monday for the first out of the money strike.
You could use it also on your weekly charts or your hourly charts, I mean. The lines will look completely different. Did you notice today Mr. Twitter actually made an alert for 1.9, not 1.2? And then I said something to him, and he came back in and said, that's off my 60-minute chart, just so you guys don't get confused. But swing points are an easy thing. You're just putting a line at a high or low point, and it's a visible high and visible low. You know, it bounced up, it went up there, so that's a high point. It fell down here and consolidated, that'd give you a low point. Right here, you had the swing low, you had the swing high. You had your swing low here, and you see once it failed to swing low, what did it do? It retested it, sideways, 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 and dropped. You'd have a swing high here. This is what your 60-minute chart would look like on Caterpillar. And here's the simple rules for you to trade the 50-50 system with. With your daily chart, first out of the money strike on next available your 60-minute chart, first out of the money strike on next week's expiration. And with your 15-minute chart, first out of the money strike on this week's expiration, except on Friday, move to following week. And it's something you can consistently trade. You guys already know that CVX, I love using the intraday swing points. When I go to the 15-minute chart, I can mark a swing point. I have a swing point here. You have a swing point right here that ironically just today's first 15-minute candle was freaking amazing what it did. But you can see here, like when you double topped, you had a M pattern. Well, this system would have had you in puts. You failed to swing low, you would have bought more puts and then felt bad about it. When you came up to this high, notice you had a top, a bottom, and a top. And on the close yesterday, you'd have been buying more puts that you would have made money on this morning, even before that wicked, crazy candle. You'd have made money on. Your swing low, it came back and closed above, but you got a new swing low here. You had a swing high right here. Right here, you could have bought some calls, and then you're waiting. At the end of the day, you probably could have bought some calls there, but what's funny is if you would have bought calls here, depending on how quick you were to buy them at the close of that candle, they actually would have sold here. I know that because Mr. Twitter also trades CVX, but he only makes Twitter alerts. Well, I'm sharing with you that he uses the same rule of this week's expiration and trades it. I always on CVX use the following week's expiration. I'm just more comfortable doing that. But Mr. Twitter trades it just like he would Apple. With those rules I just typed out there for you. And it keeps it very, very simple. Just understand you got to keep your charts clean. You keep a swing high, but just like in the case right here, this swing high right here. You notice we broke it, yep, but we closed back below it. It goes bye-bye. We had a swing low right here. We broke it, but we closed back above it. The swing point goes bye-bye. It's no longer valid. And then you just keep working up and along. There you go, up and at 'em. Yeah, I never used to use them on options. And to be quite honest, on a lot of my options plays, I never will use a trailing stop. Quite simply because I've been down 85, 90% on a trade before and had it come back and make 400 or 500%. We just had that on CVX not long ago. You guys remember that? When was it? It was a set of 114 puts. It was right here. This was a Thursday and Friday. Or no, it was Thanksgiving week. Up here, we were down like 85%. On expiration day, we sold for like 300% win. It happens. I never worried about stops on options trades because I win more trades than I lose, and I don't care if I take 100% loss on the ones that I do lose. But I know for you guys, it's different. I know you guys care if you take 100% loss because anytime something goes down a penny, I got 6 or 7 of you that start sending me private messages like crazy. It goes down 5 cents and you send me, Coach Henry, Coach Gator, Coach Cliff, Coach Nina, all private messages every second. Goes down 10 cents, you start sending us all emails. And then you get another 5 or 6 people that join you. So the trailing stops are helpful. Me personally, I trade using systems. I'm a systematic trader. And I don't differ from my systems. Like with GS, it either hits my target or it's going to be a loss. And I don't care if it's a loss. Well, here's the funny thing, Moss. I've tried to get Wendy to trade, and she's just scared to death of it. She's just funky like that. So today somebody sent her a private message, and she yelled at me. She's like, Mike, what the hell does this even mean? She gets all crazy about it. So anyway, I'm going to take just a couple minutes, and I'm going to come back and answer any questions anybody might have about swing points, about the 50-50 trading system. But much like the focus group, and like I said, you're going to see that when we pick up a second focus group chart, you're going to see that we'll be using the 50-50 system for that chart. And we're going to do that because you can use a lot of those same principles we use with the focus group. Keep it available for a potential at 5 open positions. So we can hit it, hit it, hit it, hit it, hit it, hit it, hit it. And the big thing, like with any of the other trading systems I use, you have to understand that you can't force your trading system on a chart. You have to find trading systems that work on each chart. And that's a fact. Some of you didn't understand that when you first came here. Many of you understand that a lot now. You've been in places where they just say, oh, put a 20, a 50, a 200 moving average and some Bollinger Bands on your chart and just guess. And then you're like, man, I can't do anything. Just understand that nothing's going to prevent you from having losing trades. But systematically trading and being confident and consistent with it is going to have you able to just trust and move on. And let me tell you too why I like the 50-50 trading system. Because just like everybody else, I like to buy stuff. And then when you buy it and you know you have to sell it, what ends up happening? When you buy it and you know you have to sell it, what do? You stare at it, right? You buy CVX calls and you're like, okay, about the calls, okay, okay. Oh, crap. Oh, cool. Yeah. Oh, shoot. Crap. No. Oh my gosh. Isn't that what happens? Because you got to stare at it so you don't miss your sell. Using this system, I'm constantly going through charts. As a matter of fact, I've got this on another one of my monitors. You see that? It's just a little something. I'll maximize it here. But do you see what it is? See, I'm always looking for buys. Yes, Sam. Thanks for paying attention. I want to look for buys. I like to buy stuff. And if I like to buy stuff, I can just look for opportunities to buy it, and the 50-50 system sells it for me. All I got to do is buy it. Buying can be quite fun, unless it's your wife doing the buying with your credit card. It's the selling part that stresses people out. It's the selling part that is difficult for people. The daily and the 60-minute, Moss. I'll leave it up there while I take a break real quick.